Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's weekend webinar. Traders, this is the weekend webinar for Saturday, 7/12/08, the 12th of July. And traders, we've been working together, and I do these videos every day, or as often as I can get them out to you, because I'm trying to keep you in tune with the markets. Now, there are a lot of forces out there that will try to convince you of what they think. There's a lot of talking head television trying to convince you of what they think. And there's a whole lot of people trying to figure out the fundamentals behind market moves. And traders, I'm here to tell you, as I've done in many videos, the fundamentals always come out in the charts first. Now, we've heard nothing but bad news in the last few weeks, and the markets have been breaking down. However, we talked about this happening since last April during that little up move that we had after the initial big break from the beginning of this year. We broke down hard. We hit the bottoms around March for a little while. During April, May, we were having little rallies, and I was saying, don't fall in love with the upside. I was going crazy about it, and I was doing videos and showing head and shoulders developing, and a lot of things were going on around that time. And many traders were saying, are you crazy, Oscar? This thing's going through the roof. It's new highs coming. And I continued to say, I look at what the charts tell me, and I kid you not that the fundamentals come out in the charts first. Now, if that's true, the things I was telling you about around April, May, and June should have turned into a bearish market, and we should have dropped. Well, it's exactly what has happened. So traders, I kid you not, fundamentals always come out in the charts first. Now, I received a letter just the other day, and I'd like to read this letter to you because it kind of sums up what the markets have done, what we were looking for, what other traders were looking for, and then what ended up taking place. So let me read this letter to you, traders. I think it's very quick. And it's a friend of ours from the site. He's been to the site many times, and I know he's been watching our videos for a long time. And he writes comments, and he's a good man with his comments, and I thought I'd read you one of his letters. I found it interesting. Oscar, hi, it's Gig. Hey, Gig, thanks for the shout-out here. I wanted to send you a shout-out. I know you went through a lot of emails during April and May about people getting bullish and the whole don't fall in love with the upside thing, what you see on the board now, which was on the board back then. We took it off during the little bit of the rally for May, June, but basically don't fall in love with the upside. It's been our theme through this whole move. So he goes on to say, the whole, don't fall in love with the whole upside thing. I myself was bullish, but fortunately I exited my longs the morning of 6/6/08. Pure luck, I was getting a little nervous with the head and shoulders forming that you were warning us about. People were telling you at that time, Oscar, that you were getting it all wrong. Well, with that in mind, traders, this reminds me of a video that I did back in April. I want to show you a quick flashback of that video. Stay with me now, indulge me on this, watch the flashback, and I'll come back and finish the letter. Okay, so traders, you've seen those charts. I mean, come on, what do I got to do to make you see that thing behind me is dead? I've gone like this in enough videos. Don't fall in love with the upside. Don't fall in love with the upside, I tell you. Just don't do it. Yes, we can get rallies. Remember this. Remember this. Remember the charts I showed you. And trade what you see. Not what you hear in TV land. Not what the people who are dying to make the stocks go up because they own so many of them. That's not going to get a market to go higher. Okay, traders, so no joke. We were hollering about this for a long time now. So the letter goes on. The letter continues. I guess for all the people who doubted you, you can rightfully hang up that bull skull once again and tell them, kiss my Omni. Well, thank you so much, Gig. That's pretty cool. Well, there's a little bit more. There's a little bit more. Well, it's going to be interesting to see where these markets are going now. I'm concerned with the economy and the whole Iran issue. Well, my hat goes off to you and your staff. Happy trading, continued success, Gigarick. Gigarick, thank you so much for that. Thank you, Gigarick. All right, I appreciate it when traders out there pay attention to what it is that I'm trying to tell them. Again, traders, I do these videos for you to help keep you in line with what's going on in the markets and try to stay focused and realize that if we seen all this bad news coming out in the charts and it came out in the form of a head and shoulders formation and many moving averages pointing towards the downside and many indicators finally turning after the bull market was coming to an end, well then obviously the fundamentals are coming out and do come out in the charts, and I want you to keep that in mind. And once again, one last thing about these fundamentals. You may be very, very good. You may be a fundamentalist, and you may be very good at figuring out if the government release of any report means this, well, then the market should do this or it should do that, depending on the release of the report. Well, let's say you're very good at figuring out what should happen. The problem is today's market is not the market it was 5 years ago, and millions of people from around the globe have access to hitting the button and trading the moment news comes out. So now if you're a fundamentalist, what you really have to do, here's your job, tell me if this can be done. You have to figure out what the people are going to do, the whole crowd as a mass. What are they going to do? What are they going to think? And how are they going to react when that fundamental news comes out? It's no longer a fundamentalist's job to figure out what that means to the market. He's got to figure out what all the nuts that are trading are going to do when it comes out. And I don't think that's possible. But if you stick to knowing and realizing that those fundamentals are right in the charts, well, then you could say, you know what? Those fundamentals, no matter how they're going to come out, no matter how those reports are going to be released, the chart says bearish. I would imagine that they will soon be bearish. And when they come out, lo and behold, as we're about to see on the charts I'm going to show you, the market was bearish, the fundamentals were bearish, and it came out in the charts first. Okay, traders, with no further ado, let's go take a look at some charts together. Okay, traders, the chart before your eyes now is the S&P Cash Daily Bar Chart. Each one of these little green lines represents a day's trading. Okay, traders, once again, I've showed this to you in many videos, but this is the formation of flavor at the moment in time. And if you are an analyst that is proactive, you study what's happening now, whether you like the formations or not. We're stuck with head and shoulders for now, so let's go review. Back at the top of this market, we put in a head and shoulders formation. This was the end of last year into the beginning of this year. That formation, this head and shoulders, gave us a projection down to here. Following those arrows, the market breaks, and look where it goes, traders. The projection ends right here. The market ended up right about there. That was pure projection off of a head and shoulders formation. We did these projections in class with hundreds of Omniacs trading along with us, analyzing the markets with us. They seen the projection and they watched as it got there. And this has got nothing to do with me being a genius, traders. This is just using technical analysis to your advantage. So here we go. We start to mark time. Now we're in today's environment. We have another shoulder, a head, and another shoulder, which gave us a projection down to here. We have just come down to that area now. We haven't exactly hit it yet, but we're very close. Now that's based upon this head and shoulders being the size that it is. But one of the things that happens though with head and shoulders formations is sometimes as the market marks time moving this way, the head and shoulders actually grows, and a lot of what you thought was a left shoulder is actually part of the head. Then the left shoulder grows more, the right shoulder grows more, and the projections get deeper. Now that you've seen this right here, I want to show you the next chart in the next progression. Okay, traders, now this is the exact same chart as the cash S&P, same time frame, but as the head and shoulders started to grow, we took a little more space over here, calling this more of a shoulder. The head got a little larger, and the shoulder now is at a spot where we're just beginning to come out of it because now projections are lower. They start here and work their way lower. So as this head and shoulders is forming, look at the way it's growing. This was what we thought was the second version of that head and shoulders, and more time has been marked, and now let's go take a look at what it really is. Okay, traders, you are now looking at the very same S&P chart, the cash daily bar, the same time frame, but now that the head and shoulders is finally really revealing itself for the size it is, it's even larger than its predecessor. Look at that. It's larger than the one that knocked us down, all the way down to the Jan-Feb lows. As you can see, the head and shoulders, the big breakdown, we had the projection, we met the projection. Okay, same thing, we had the smaller head and shoulders, we had this projection, same one that's on the chart. We thought we met that projection, but take a look at what it really is. Look at the size of this head and shoulders, traders. It is large. The left shoulder is formed, the head is formed, and the right shoulder isn't even complete yet. Which means once this is done messing around in this area and breaks again, then the projections begin from here. Traders, according to what we see, we got some downside coming our way. If you look at how well head and shoulders formations work, based on what you see here, we have big downside coming our way. That doesn't mean that the markets will just drop all at once, and I am no proponent of a crash, but I think that we are going to work a lot lower until we fulfill the projections off of these shoulders. Let's go now take a look at all three of those charts next to one another, and you can see the progression of the head and shoulders movement. Okay, traders, as you can see, when the head and shoulders began to form, it looked like this. As time marked, you realized it was getting bigger, and now look at how big it really is. Traders, that's right there before your eyes. That is the same data I analyzed that you should be analyzing. That head and shoulders is getting large, and it is definitely going to point us in a downward direction come the near term. Okay, traders, after analyzing that S&P, I took another look at the Dow Jones Industrial Average. Again, they should look very similar, which they do, and you can see the head and shoulders formation, the big one here that took us down. Now we have this one, right? And we thought that was the end of the head and shoulders, and this was the breakdown out of it. And we made our projection, as you can see here in red, and we assumed we'd hit that projection and then maybe start to bounce a little. But once we noticed the S&P and the way that head and shoulders was growing, we started to analyze the other markets. Now you see the Dow Jones about met its projection from what we thought was the size of the head and shoulders. Let's look at the next chart now and see what's happening there. In reality, traders, this head and shoulders is much larger than we first originally thought. It encompasses all the movement after the drop in Jan-Feb. It encompasses that whole area as a left shoulder. The head is here. The right shoulder we are just beginning to get out of, which means this projection, which used to start right there, that red line, has to now begin down here. And I'll tell you what, that looks like it's going to 10,000 to me based on the projections on the head and shoulders. I will say again, I never expect that markets will get there all at once, but that looks like where we're going to go before this thing finally stops going down and takes a breather, very much like it did this time. The head and shoulders went down and then took a breather, created another head and shoulders, and now is heading back down again. So the likelihood is it'll take a breather once it hits its projection down here somewhere, and then maybe put in another third head and shoulders. But who knows? That's pure speculation. Something you may want to think is coming your way. For now, we have two, and let's see what the next chart looks like. Okay, traders, once again, sticking with the theme, the head and shoulders formation, which is extremely bearish in the environment we're in. This is the Dow Jones Transportation Average, the leader of the other indices. And we had a head and shoulders formation here. As you can see, we're still working the right shoulder and have not even begun to break. Once again, though, this, like the other charts I just showed you, this is not quite the size of that head and shoulders now. When you take another look at the data, which we're going to do on the next chart, you will see that it is even larger than we first expected from the data that we had collected up until now. Let's take a look at the next chart. Okay, traders, this is the same chart, the Dow Jones Transportation Average. If you recall, we thought that just this was the shoulder and that this was the head and this was the shoulder. Well, take a look at what it really is. This whole area turns out to be the left shoulder. Look at the size of the head. The right shoulder is just beginning. It's a babe right now. It's not even formed yet. We're going to have to break out of this and go lower. I kid you not, traders, based on the data before your eyes and the way these charts are building, with little rallies or without them, we have more downside to go explore before this bear move is over. So, you've seen the charts. Traders, I kid you not, you've seen the flashback. Then you saw the action that took place. Now I've shown you the head and shoulders that actually developed afterwards and the downward move that we had. Well, here we are again. You saw the previous one that knocked us down into the Jan-Feb lows. Now you are looking at another one. It's made new lows since then, and I don't think the rout on the downside is over yet. So with that in mind, traders, I tell you one more time. Thank you. Traders, don't fall in love with the upside. No matter what you do, no matter what these markets do, don't fall in love with the upside. This thing gave you a warning back in April. I am giving you another warning now. If we rally, do yourself a favor and don't get in the bull camp. Wait for whatever rally comes to come to an end, and right back down we should go for a third big leg. I'm not quite sure if this leg's over yet, and when it is done and you get a rally, and it should go back down. All right, traders, I hope that these videos that I put out for you are helping you, because that is the whole idea behind what it is that I do. It's why my whole team works 24 hours a day. We are here to help you read the analysis right. And if you can get the analysis right, traders, I kid you not, you've just seen it before your eyes. You don't need to know the fundamentals as well as you might think. They do come out in the charts first. I hope that's been proven in today's video. We talked about it beforehand, and now we've shown it after it took place. All right, traders, as I like to tell you in all my videos, never trade alone. Don't trade alone, traders. What I just showed you, I show in much greater depth to many, many Omniacs who come to my academy. They sit down at their desks, looking at their computer. I am on live camera, webcam, and microphone, and I show them analysis and teach them how to use it, how to make trades based upon what they see, and how to make sure that what they see makes sense. And again, traders, I have told this and taught this to many of my students, and I'm sure if you come on down to our academy and ask them, they will absolutely tell you that the fundamentals are built right into the moves that you see on those charts. So imagine if you can just remove that side of the equation. It's so hard to know charts, the analysis behind the charts, the fundamentals, when markets open, when they close, how to place the orders. Wow, there's so much to know. But imagine if you can remove that whole fundamental. What's the government doing? What do the reports mean? What did the BOJ do? What did the BOE do? It doesn't matter what the Bank of England did or the Bank of Japan or what our Fed does, because it will come out in those charts for you. And we will teach you how to read those charts right at the Omni Trading Academy. So come on down to www.livewithoscar.com. Grab yourselves a membership. Traders, memberships are free. I'm talking F-R-E-E. We are here to help you, not to pull money out of your pockets. Can you upgrade to get greater lessons with more in-depth analysis to really become a great trader? Well, of course you can, but we help anybody who comes to that site. So bring your butts down to the site, traders, and learn how to get this right. All right, traders, give me a buzz anytime, day and night, 702-629-4755. And like my buddy Gig did, please continue to send in your emails. You can send emails to oscar@futuresanalysts.com. Okay, traders, I hope once again that you do your analysis, you do your homework, and maybe you can see the same formations that we are pointing out to you. It's not just the head and shoulders formations. It's what the moving averages are doing, and what all the indicators are pointing out, what the bond market's doing, what the currencies are doing, what the US dollar is doing, what the crude is doing. It's one big picture. But again, you can put the whole picture together if you do your analysis properly. Okay, traders, thank you for watching my videos. Please make sure that you subscribe to these videos. And if you like the videos, please leave comments. You know what? Even if you dislike them, leave your comments. Try to gear your comments towards helping new traders that don't know about our academy, that don't know about the videos, that don't know how much help we can give them. Gear your comments towards helping them, traders, because you know what? You Omniacs who are loyal to my site and are loyal to your analysis, You already know what we can do for you. So help me help the traders out there that just don't know, that are swimming in a pool of shark-infested waters that need somewhere to go. We will help them, and you know that. So traders, thank you so much once again. And this is the last thing I'm going to say. Remember, keep your emotions out of trading. One of the best ways to do that is to say this, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.